Logitech is a company that most people are familiar with, but for those of you who aren't, Logitech is a company that manufactures keyboards, webcams, along with other computer accessories. Logitech is an interesting stock because they are uniquely positioned in 4 different secular trends. The first trend is video. Logitech supplies many different video products to the market, which has now become more valuable with distance meetings, conferences, and events. Logitech sells gaming keyboards and mouses. The third trend is online creators. Logitech sells a variety of streaming devices for this trend. And the fourth trend is working from home. Logitech sells a variety of affordable work from home webcams. But the big question here is, can this company keep soaring as the economy reopens? Before we get into this video, make sure to click that like button and subscribe to the channel if you haven't done so already. With that being said, let's go ahead and get into the numbers. Logitech has a market cap of $11.8 billion, and they have a PE ratio of 24, which is slightly undervalued when you compare it to the S&P 500's PE ratio of 27. Logitech also pays out a forward dividend yield of 1.06%, and they shouldn't have any problem paying out that dividend because they have a 26% payout ratio. And Yahoo Finance has given them a 1-year price target estimate of $76.70, which is an 11.3% increase from current levels. And if we take a look at their profitability, we can see that they have 15.25% profit margin and they have 10.99% operating margin. So as far as their financials go, they have pretty strong financials along with double-digit profit and operating margin. If we take a look at their balance sheet, we can see that they have $809 million in cash, which is great because they only have about $36 million in debt, and they have very healthy cash flow at $507 million. Overall, Logitech has strong and healthy financials. Now, out of all the slides in this video, this one is the most important because it truly highlights how fast Logitech is growing from this stay-at-home trend. We can see that Q1 sales were up 23% year over year, and we can also see that operating income grew 76% year over year. Earnings per share grew 56% year over year. Operating income grew 75% year over year, and we can see that cash flow shot up to $119 million for an increase of 221%. And we can also see that we should click the like button and subscribe for the YouTube algorithm because the more likes I get, the more people will watch the channel. And the more people that watch the channel, the closer I get to becoming monetized, so please click the like button. But in all seriousness, for growth investors, a 56% increase in earnings per share along with a 221% increase in cash flows clearly illustrates how well positioned Logitech is within the new stay-at-home trend, and we'll be able to witness extra growth throughout the next couple of years at least. Now, it is important that we go over some of the risk factors when dealing with Logitech so that if you do invest in the company and the stock price falls, you'll understand why the price is falling and then be able to make decisions on whether or not to double down on your position or cut your losses. And one of the risks to note is that Logitech's main factories is based in China, meaning that they're susceptible to trade restrictions and tariffs. So Logitech's stock price could fall if we see more trade tensions in the headlines. And however, in this situation, I would take advantage of the dip and buy more stock because the fundamental aspects of the company aren't changing. Another risk is that Logitech might not be able to execute their growth strategies into other sectors, which would have a negative impact on their operating results. And this is extremely unlikely since Logitech has a well-established management team. However, I'm not entirely sure how profitable they're going to be with the esports trends. Activision and Nintendo are better stocks for that trend. And if this situation occurs, then I would sell my shares because that would mean that Logitech would have missed out on their growth opportunity. And all of this leads us back to the original question of, is Logitech a buy? I like Logitech. In short term, in my opinion, they don't have a good setup for an earnings pop. However, Logitech is a solid company that is on my watch list, and I'd pick up some shares of Logitech on a dip. Maybe that dip comes after earnings reports on Wednesday. All of these trends are long-term trends, by the way, and it's important to note that Logitech is seasonal with highest amount of sales coming from October through December. However, if we take a look at the price chart, we can see that the stochastics levels for Logitech have been overbought for 4 months now, suggesting that Logitech is overvalued. And this is not a favorable setup for a stock price that is about to go into earnings next week because the expectations are too high. I'm very interested in Logitech, and right now I'm going to wait until after the earnings call to make a decision. Thank you guys for watching the video. Make sure to smash that like button and subscribe, and have a great day. Bye.